Hey everyone, look at this glorious, amazing view. I never get tired of it. I'm going to be having future videos in this background right here. All the strip hotels, amazing views. Look at this. Lot to look at. I can come here every other day because I just moved here, believe it or not. If you guys want to come and have a cup of coffee with me, you're more than welcome to do so. Just go around. Can see the sunset, everything. I want to talk about the stock market today. We had a mixed day, and I should have done a video about this a week or two ago. I got caught up with a lot of other things. In July, the stock market, especially the NASDAQ, hit all-time high. Shortly after, the markets were plunging. The plunge was really, really high. A lot of people were panicking. A lot of people thought it was going to feel like the end of the world. And I knew there was a lot of overhype. I just thought to myself, look, I have over a decade of experience. It's better to just simply wait it out. Potential for a dead cat bounce. And actually, believe it or not, the NASDAQ has recovered much of the losses, I believe most. The Dow Jones is at or near all-time record high. There is a lot of patience that you need. There's just no question about it when it comes to investing. I do believe there's more room to the upside. We're going to see some delightful news coming along the way. Of course, not just on the way, but last Friday, as you know, the markets went up because of the plans that they're going to cut interest rates by the Federal Reserve for the first time since several years, believe it or not. However, in this video, I want to make it very clear that I'm looking forward to sell my stocks, my index-backed ETFs. Look, folks, I've been in the markets for about 13, 14 years now. There's just a lot of signs to show that the market is overheated. You look at the price-earnings ratio. You look at the fact that historically, when you see that the Federal Reserve lowers interest rates, it actually doesn't really help the stock market because you can look into interest payments, confidence in the economy, and so forth. We see the stock market go down. I mean, just look at 2007 to 2009. They kept lowering interest rates, stock markets went down. You're seeing the unemployment rate starting to tick up. There's all these signs. Fall, things can get pretty spooky. Typically where you have lots of corrections. And look, folks, I'm not surprised if we're going to see several months of correction down the road. There's just no question about it. Now, a lot of you are going to say, well, you know, we've had an economic downturn in 2020. Well, that was a very unique, rare event, believe it or not. Of course, it was kind of like we just turned on the switch and a lot of people got their jobs back much quicker than the financial crisis downturn that we had about a decade prior. Keep in mind, we're seeing a lot of signs that the real estate market is coming down. Now, yes, inventory is very low here in Las Vegas, and surprisingly, inventory is pretty damn low compared to all the other states across the country, especially in the Sun Belt. However, let's not forget, the Vegas economy is very volatile, and if unemployment rate goes up, people are going to have less disposable income. That's going to impact hours, tips, earnings of these workers, and you're going to see a good number of homes return to the market. Remember, this is one of the reasons why it was so bad here about 15 years ago, because their tipped earnings went down, the hours went down, a lot of people got laid off. There's no question about it. Keep in mind, Vegas is not like a housing market like the California coast, Manhattan, Hawaii. The market is very, very identical to markets of Phoenix, Florida, the list goes on. And I know they don't have the insurance crisis and so forth, because that's the problem with having in Florida. But if you look at historical charts, this is what you get. Now, people are going to say, well, you know, there's all these Californians coming in. Well, I looked at some charts. inbound migration is coming down. And let's not forget the fact that when investors buy properties, they have to get a return on investment. Keep that in mind. Basically, there is a lot of signs that things are not looking too good for the real estate market. And even if the market goes up, which it can, for real estate, I tell a lot of these real estate agents, why isn't the increase like well into double digits if it was so good? Think about it. The thing is, if we don't have a crash in the stock market, I can tell you this, at least I've been able to minimize risk. I think the way I see it, oftentimes you have to buy into the stock market when there's a significant correction, when there's a significant bear market that happened over a course of period of time, because we know it. Usually every 20 years, the stock market is higher than what it was. When you go back from 1975 to 1995, 1995 to 2015, 1955 to 1975, the list goes on. Think about bear markets, downturns, corrections as really a gift when you think about it. Now, when the market goes down and things get really overheated, you do have buying opportunities. You don't have to stay on the sidelines into cash. You can invest in a bear fund, in an inverse ETF. So if the NASDAQ goes down 3%, that ETF goes up 3%. It's very simple. And when you want to get back into the bargains, you have to look into PE ratios. You have to look at oversold metrics like relative strength indicator, moving averages. Is the unemployment rate starting to reverse, trend in a different direction? GDP growth. Remember, folks, we really didn't have a true fix to the problems that we've experienced in the late 2000s downturn. We didn't do a good job fixing the problems. Yes, some things are different, mortgages, a lot, many other aspects, but in the grand scheme, we have not fixed our debt-driven, addicted, Federal Reserve pumping economy. And folks, even if I was in charge, if I was in the ballot in November, I think we're going to have a lot of economic problems. You can argue whoever wins in 2024, there can be some impact in the overall economy because they have differences in tax policy. However, it's pretty much, you have to think about it, is that if somebody has to take a dump in the toilet, it's going to come no matter what. All right? This is something that's very, very difficult to avoid. As far as everything else is concerned, when we have bear markets, keep in mind, I just don't see that I'm so bullish on crypto. As a matter of fact, in downturns, commodities, especially energy and agriculture, don't do very well. All right, everybody, let me know what you guys think. You guys like this view? I'm going to be doing more videos later on. I'm going to be pulling out of the markets, unless maybe there's going to be different developments. But right now, it's just a lot of signs are showing that things are not looking too good in the several months and possibly in the next year or two ahead. Thank you guys so much.